Here's what my routine as a trader looks like from when I wake up to when I'm done trading. The first thing I do is wake up at exactly 4 a.m. And within 5 minutes of waking up, I do a full body ice bath. This helps awaken the senses and starts my day off sharp. After this, I boot up my computer and do no less than 1 hour of market research. This includes getting all the latest news, reading the most recent articles, and projecting what will happen during the day. Right after this, I will take a second ice bath to awaken my senses. Once my second ice bath is complete, I'm back at my screen. This time, I'm doing a full hour of backtesting. This is because I want to warm up my mind to price action and to seeing certain patterns. Now, once I'm done that, I'll journal for another hour and review my past trades so that I know all the mistakes I've ever made and won't repeat them again. Then, I'll meditate until right before the market opens. I make sure to visualize exactly what the market will do to make sure that exact thing happens. And 5 minutes before the market opens, I'll take my third ice bath to once again reawaken the senses. Once the market opens, I'll be on the screen for the next 6 hours straight, at least. I need to grind out every possible move, since that's what the pro traders do. After those 6 hours, I will have made tons of money because I'm so skilled and brilliant. This happens every single day, without exception. I never take losses. It's impossible. Then once that's over, I take my fourth ice bath, and finally, and most importantly, none of this is real. My actual trading routine looks nothing like this. Some like to pretend that trading is this extremely difficult and time-consuming venture, and that you need to be a locked-in, disciplined genius all the time to even make any money. But this isn't even remotely true. When you do it right, trading is one of the most efficient and low-demand ways to make money. Anyone who makes it more complicated than it has to be is either intentionally trying to deceive you, for one reason or another, or they simply don't know what they're talking about. My actual routine is simple, boring, and extremely effective. So in this video, I'm walking you through the real routine, how I prepare, how I trade, and how I log off early, and how this boring, repeatable process outperforms 99% of traders trying to do way too much. Let's start with my pre-market routine. My actual trading routine starts about 5 minutes before the market open at 9:30 a.m. Eastern. I don't have any sort of pre-market routine or do any type of research. In fact, I don't even check the news anymore. And this is actually for a very important reason. Number one, because it keeps my mind fresh and doesn't cause any sort of decision fatigue. It's extremely important to not exhaust yourself with market exposure, because the quality of your decisions goes down the more you're exposed to the market. And number two is that anything that happens before the market open is simply not important or relevant. Because here's the thing, I only trade after the market opens. I never trade pre-market. So whatever happens in the pre-market is none of my concern. You should never be looking at a chart that you don't intend on trading. A lot of traders believe that you should be on the charts as much as possible to gain more experience and get better at reading charts. And to be honest, after nearly a decade of doing it, this is pure nonsense. The vast majority of price action is random and unpredictable. This is something we all agree on, right? If it wasn't, we would be trading all the time and making money all the time, since price action is so easy to read. But it isn't at all. It's only useful to us at very specific points in time where we can scrape an edge out of it. I have a video where I go more into detail on this and how you should be trading instead, which I'll link here. So there's no point in staring at a screen unless you're actively trading it. It's the equivalent of staring at the slot machines in a casino and expecting to get better at predicting them. That's why my pre-market routine is basically nothing. I don't have a pre-market routine because I don't need one. There aren't many traders that need one, actually. Every action that you take in trading will either help you make money or hurt you. There is no in between. Even if it's something that you think is harmless, like an extra indicator or pre-market research, remember that it'll slow you down and potentially hinder your decision making. It's just dead weight if it's not useful to you, in which case it's actively harming you and clouding your judgment. So you should evaluate if you actually need a pre-market routine before trying to establish one for no reason. That's what I did, and I realized I didn't really need one at all. It was all just a coping mechanism so that I could feel more in control and like I had a better understanding of where the market was going to go. But I realized that pretty much anything outside of my actual chart when I'm looking for a trade is dead weight, so I cut it off. My trading routine begins 5 minutes before the market open, since that's when it's relevant for me to start trading. Before that, I don't look at my chart and don't even think about trading. Now here's what I do about 5 minutes before the open. By the way, My one-on-one mentorship is officially closing next week. I'm only taking on a few more traders before I shut the doors for a while. If you've been wanting direct feedback, custom trading plans, and full access to my process, this is your chance. Spots are extremely limited, so once it's full, that's it. Click the link below and join the waitlist to grab your spot before it closes. I pull open my chart and this is what I see. I trade using the LCE method, which means that I mark out supply and demand levels and take trades from one level to the other. If you're new here, I'll link some videos right here that explain the full strategy, which you can watch later. But what I'm looking for are breakout trades. And a breakout trade means that the price breaks out of a supply and demand level and moves to the next one. Now we're on the 1 hour chart. We see that the cloud was bullish, but recently went flat. The price here is caught in a type of range. And this range can go on for a very long time and chop us out if we try to trade it, which is why I avoid the range entirely. So when we're looking for a breakout trade, we're looking for a clean break out of this range. That will give us some clear price action to work with and won't be so choppy and random. I'm not interested in trading anything else. I'm either looking for a break of this demand level, for the price to move to the demand level under, or a break of this supply level to the next supply level above. These are the only two moves I'm considering. So at approximately 9:25 a.m., what I do is set alerts at both the upper and lower levels, and then I turn off my screen. I don't look at price action if I don't have to, and I want to keep my screen time to a minimum, and that's my entire pre-market routine. Now let's move into the intraday trading part. I'm not on my screen and I don't watch price action. The only time I check my chart is when I get alerted to either side. In this case, I got alerted to the upside. So what I do is open my chart and assess whether to take a trade or not. We want to make sure the price aligns with our projection and will continue breaking out. And this is super simple. All we need is confirmation from the cloud and from market structure that this is ready to break out. The price is aggressively breaking into the supply level, and this is already a strong indicator that we have enough momentum behind this move to keep trending higher. The second thing we need is the cloud to confirm our direction. Now the cloud here is flat, but recently began curling up. So all we're doing here now is deciding whether the price is more likely to return to the level it came from or break out to the next level. And it doesn't need to be perfect every single time. We won't always have perfect price action and alignment. All you really need is probability to tilt in your direction. There are a million different ways the price can go about it, but we don't care about how exactly the price gets there, whether it takes 5 minutes or 2 hours. It's the same for us, since we'll get the same P&L at the end of it. We just care about the general direction of the price and which direction is more likely to work in our favor. So based on the information we have here, we can conclude that the price is more likely to break out than to return inside the range. At this point, I enter the trade long, with my stop under market structure and my target at the next demand level. And from here, I close my screen again and wait until I get notified that the target or stop got hit. The one exception I have is if the trade has moved a decent amount in my direction, say halfway to target. At that point, I'll move my stop to break even to prevent a loss on this trade. But that's about it. The actual amount of time I spend on my screen is maybe 5 minutes before the market opens, and then another 10 to 15 minutes to enter my trade and set it up properly. And sometimes we have a range day and neither side breaks out, so I never even get notified. And my screen time for the day is only those 5 minutes I spend marking alerts. So my actual screen time for the day is maybe 15 to 20 minutes. And that's drastically reduced from the literal hours that some traders spend on their chart every day, both before and after the market open. And when you boil it down, that's all you really need. The rest is fluff, designed to make you feel productive, but trading shouldn't take up your entire day or exhaust you at all. Less screen time, less trading, and more profit. That's it. And this is exactly what I teach traders in my mentorship. You'll work with me directly, and we'll build a custom plan around your trading. We'll have one-on-one calls, as well as a private chat to communicate with me. I'll also give you access to this exact level-to-level chart that you can use in real time. And remember, I'll be closing this next week, so click down below to secure your spot. And if this video helped you, then be sure to drop a like and hit subscribe because I drop videos exactly like this every week. I'll see you in the next one.